Hey friends, thanks so much for joining us. We have on the line the one and only Bill Holter from Miles Franklin. Bill was a broker for 23 years and a financial manager for more than a decade, and he joins us from Texas. Bill, how are you?
Good, Sean. How are you?
Hey, we're doing well on this end. I've been anxious to speak with you for a long time, Bill. It's been far too long. You recently said, what we have coming is a collapse of everything we have worked for and everything we've built and saved over our lifetimes and that of our ancestors. And I want to start with that because I want people to understand the gravity of the global economic and domestic financial situation, Bill. What do you mean by the collapse is going to cause us to lose absolutely everything we've saved over our lifetimes?
The system is based on credit, and the whole system has been built on credit. What we're headed for is a credit collapse, and that's going to take the banks with them. It's going to take insurance companies with it. It's also going to take currencies with it. When this happens, everything that you've saved in the credit system, paper is going to go with it. Your life savings, whether they be in banks, insurance companies, annuities, what have you, sovereign treasury bonds, paper is going to be wiped out. It goes back to Exeter's pyramid. Everything is based off of gold, and that pyramid grows, and you have riskier and riskier assets. And the whole pyramid is going to collapse, and we'll start all over again. And what will remain through that are real assets.
You know, Bill, the reason I wanted to start with that particular quote was because we hear a lot of people out there accusing those of us who have been monitoring this situation, documenting the collapse, as I like to call it when I interview Andy Hoffman. We're documenting this collapse.
Right.
A lot of people accuse us of using hyperbole and saying it can't possibly get as bad as what you said in that quote, Bill. And I think the reason for that is a lot of people suffer from normalcy bias. But when the world is flooded with mostly paper assets, it's not hyperbole, is it?
No, it's an historic bubble. It's the biggest paper bubble in the history of history. It's a dollar bubble. It's a U.S. Treasury bond bubble. We reached debt saturation level back in 2006. Actually, we started to in 2000, 2001, and they were able to reflate. We reached debt saturation in 2006, 2007, and they're trying to reflate. This time we've had QE1, 2, twist, and QE3, and I suspect we're going to have a QE4 very shortly because the bubble is been deflating, and it's deflating as fast as they've been putting money into the system. What actually happened is we built up this giant credit edifice, and it couldn't grow any further. So what we've been doing for the last few years, if you want to think of it this way, is we've been living off the fat. And at this point, we've gone through the fat, the muscle, and we're chewing into the bone now.
And meanwhile, Bill, the rest of the world is de-dollarizing. So it's
Right.
even worse, right, than where we were in 2007, 2008, because at least in 2007 and 2008, the Russians and the Chinese weren't actively trying to flee dollars. So the situation now, Bill, it's far worse than where we were in 2007, 2008, isn't it?
Right, because if you go back to 2007, 2008, China was still accumulating treasury bonds. And they put a halt to that in 2009, 2010, or started to slow down. And I think it was 2011 where they actually peaked in their holdings, and they've been gradually reducing those holdings. I believe that China may have hedged or have been hedging for the last 3 or 4 years their dollar portfolio by going all over the world and making deals in dollars. In other words, they go to Africa and they buy a diamond mine or a gold mine or you name it, hard assets, real goods, and contracting in dollars. In other words, they'll pay with dollars. And they're going to use their treasury securities that they haven't sold yet, but they've basically pledged them for deals all over the world. And I think that's how China has more or less extricated themselves out from under a big worthless holding of dollars.
Well, since we're on the topic of China, you have recently written an article called Triggers, which plays into exactly what I've wanted to talk to you about. Why is the AIIB such a big deal? And for those who forget what that stands for, it's the Asian Infrastructure Investment Bank. And it is a very big deal. Can you explain to people why it's a big deal, Bill?
First and foremost, because it's public. In other words, the world can see who the applicants are. And the applicants started, the big U.S. ally that started as an applicant was Great Britain. And that was a shock. After they applied to become a charter member, they were immediately the following day rebuked publicly by President Obama. Then 2 or 3 days later, or maybe a week later, then you had Germany, Italy, and France join. So that's another good part of Europe, and of course, U.S. allies, NATO countries. Just last week, right under the deadline, Israel joined, which you've seen the spat between Netanyahu and Obama. I think even the Chinese were surprised that Israel applied. Now, there is one other country that applied, which at first it wasn't a shock to me because I didn't think it through, but after thinking it through, Taiwan actually applied. And I'm in my mid 50s. If you were born in the 60s or early 70s, you'll remember that the United States considered China to be Taiwan. And what is considered China today, mainland China, was considered Red China. They were not officially recognized by the United States. So for Taiwan to apply is a big shock for that reason. It also tells me that the elder families are on board with this. In other words, the elders of China have given their stamp of approval. So I think Taiwan is the biggest deal, and there's been zero press about it.
There are other pieces of the puzzle which you remind us about in your article here, Triggers. It gets a little hard to catalog all of the massive global changes that are happening behind the scenes and, as you know, publicly now. And the
Right.
AIIB is only one piece of the puzzle. Another, you write, is the clearing system set to directly compete with SWIFT. Yet another is the BRICS Bank. And let's not forget the Shanghai Physical Metals Exchange set to go live shortly. These are significant sea changes, aren't they, Bill? I mean, it's like the world is totally preparing to get rid of the dollar.
That's exactly what they're doing. I believe that the world for the last at least 2 years has been preparing themselves to move away from the dollar, but also in a manner they've been isolating the U.S., isolating the West, because they know that a collapse is coming. And if they can think of it as throwing a bomb in a bomb container or something, if they can isolate or ring fence the Western financial system with them outside of the system as much as they can be, then they're going to mitigate the damage to them. It will also allow them this swift clearing system, the BRICS Bank, the AIIB. It will also allow them to restart or continue business, commerce, trade, whatever you want to call it. Now, the Shanghai Physical Exchange, I view that a little bit differently. I kind of view that as more than likely the trigger. And if you follow what China has been doing, they have been accumulating, call it 2,000 tons of gold per year for the last at least 3 years. They probably have 10,000 tons of gold or more. Their last report was 1,054 tons. I think that was in the summer of 2009. So more than likely they have well more than 10,000 tons of gold stocked up. And they've been buying it based on prices made in in London on the LBMA and on the Comex. My thought process on the Shanghai Gold Exchange, because it is going to be a 100% physical cash and carry, you're not going to be able to put up $1 and control $100, or in the case here in the West, put up $1 and sell $100 of non-existent gold. That is what has depressed the price. It's my theory that you will see China use gold and silver as some sort of a trigger, if you will, to explode the price and more or less expose the Western market as fraudulent. Now, if you look at what China is taking in imports each month, they're importing more than 200 tons per month. The Comex has available for delivery a whopping 20 tons of gold. That's 2 days worth in a month. And I'm just saying business days now. I'm not even talking about Saturday or Sunday. It's a whopping 2 business days of what China imports each and every month. Once they see this supply dwindle and they know they're at the bottom of the barrel, I think they will pull a trigger, and it would not shock me to see China step up, and they will probably attack the gold price, push the gold price higher, and that'll be the end of Comex and end of LBMA, because you'll have arbitrage come in and it'll clean up the inventories. Once that begins, I think what you'll see is China is going to step up and make a bid for any and all ounces of gold, or in their terms, kilograms of gold, at a set price. And that set price will be much higher than it is right now. Now, what does that do? Any countries, and even all the way down to individuals that do not have gold, will be priced out of the market. It'll be priced too high to be able to accumulate and catch up, so to speak. It will also mark China's gold hoard up by multiples. So whatever effects they're going to have, and they will certainly have some from the collapse of the West, whatever losses they're taking, or even the losses on their dollar portfolio, they will be somewhat filled by the gains that they create in their gold holdings.
Well, just to recap, Bill, the AIIB is just one piece of the puzzle, guys. We have the BRICS Bank, the Shanghai Physical Metals Exchange is about to go live, and as you note in this article, and powerfully so, Bill, you write, it is truly scary to see all of the pieces that have been put into place because they are all locked and loaded. Nearly all of the future plans and programs are now in place. The only one we are waiting for is the Shanghai Precious Metals Exchange to go live, which should be very soon. This exchange can either be a trigger or a barometer. China will eventually set price for gold and silver, whether you want to believe it or not. You sound a lot like Pierre Lassonde in that quote there, Bill, because Pierre Lassonde has said now the LBMA will not set the price, the Comex will not set the price. We will see the prices of precious metals go higher, ballistically higher, because of the SGE. These prices are going to change. They're going to go higher because of what's going on in Asia. True?
I wholeheartedly believe that. China is going to make price.
Well, Bill, why don't we do this? Because again, I want to reframe for people that what you are saying is not hyperbole. It's quantifiable fact. There are significant nation states that no longer want U.S. treasuries, and they don't want to hold dollars. And there is a coordinated move to move away from the dollar. Do you find it a bit ironic that really the only nation state that hasn't applied to join the AIIB, with the exception of North Korea, is the United States?
I don't think Canada has. Has Canada? I don't believe they have.
Okay. Well, it's the North American Union then that will be left out in the cold.
Well, it makes sense because the U.S. is trying to hold on desperately to dollar hegemony.
Well, Bill, why don't we do this before we lose you? Let's talk a little bit about the Eurozone and Greece. What will be the trigger for the collapse of the Eurozone? And I guess the second part question would be, do you see the collapse of the Eurozone happening before the collapse of the dollar?
Let me answer your second question first, because I think that's the easiest. It will not matter which one collapses first. If one collapses, the other will be gone within 48 hours. So you're not looking at the collapse of the euro first and then 6 or 8 months or a year later, the dollar collapse. I can't see that happening. There's far too many derivatives outstanding. The world is far too globalized at this point. If you have a financial death somewhere in the derivatives chain, it kills the entire chain. So that's the answer to the second part. The first part, I believe the odds are pretty high. And as we're doing this interview right now on Tuesday, Mr. Tsipras and entourage is in Moscow meeting with Mr. Putin and the Russians. There is speculation that they're going to get a cut in gas prices. They may get some type of funding, whether it be directly through Russia, whether they could afford it or not, or Russia a conduit from China. It's my opinion that the East is going to offer Greece some sort of alternative. And the alternative that the West is offering them is there is no alternative. They're trying to shove more debt upon them, just trying to kick the can further down the road. And the bottom line is Greece is broke. They've got a payment, I believe, Thursday or Friday of this week of less than 500 million euros. And it's questionable whether they can make that payment and fund their daily government operations. So it's not, you're talking about less than €1 billion now that could tip this thing upside down. I think the odds are fairly high that Greece does exit, and that will spell the beginning of the end for the euro. And once you see a collapse in the euro, you'll see a derivatives collapse go global within a couple of days.
And that would be a waterfall event that would also bring down the dollar then?
Well, of course, because if you've got European banks that are collapsing, if you've got the euro itself that's collapsing, think about derivatives. They're all based on an interest rate factor, a currency factor, and look what happened when Switzerland dropped the peg to the euro. Within 5 minutes or 10 minutes, there was a 30% move higher in the Swiss franc and lower in the euro. Now, what did that do? What was the unintended consequence? Well, it pretty much bankrupted the Austrian banking system because they had their mortgage banks had lent money to fund real estate purchases at low interest rates. They used the franc because the franc carried the lowest interest rate. Well, all of a sudden, overnight, those loans were revalued 30% higher, which turned many properties upside down where the loan was actually higher than the value of the property. So now you have the Austrian banking system on the verge of collapse, and that's just from the Swiss franc, which, yes, it's an important currency. It's a big currency. It's not the dollar. It's not the euro.
Let me ask you one last question, Bill. What do you say to critics after this litany of quantifiables that we just shared with our audience? What do you say to critics who say, Bill, this is poppycock. The dollar's never going to collapse. It will always have a place in the world economy, and you're just talking your book?
After I'd say you're dreaming, I would tell them you're right. I am talking my book. My book is gold and silver. I believe in gold and silver. I started building a gold and silver position in 1997, and I retired from the brokerage business in 2006 with one of the largest gold and silver retail positions in the country. I began writing, and Bill Murphy at La Metropole picked up my work in 2007, and I wrote until 2011, early 2012, and that's when David and Andy Scheckman asked me if they could have the rights to my work. So what I'm telling you is I'm saying the same thing that I've said all along. I would say, argue with my logic, not with who now gives me a paycheck. Because I was doing this for 5 years as a free blog.
Right. Well, and you started building the largest, one of the largest retail positions in gold and silver in 1997, and that certainly predates any of the writings you've done for Miles Franklin.
Right. Well, I can tell you, I thought that mid 1997 to 2001 was a really, really tough time because you would mention gold or silver and people would roll their eyes. I'm going to tell you it's as difficult or more difficult now. There are more people that understand that there is something wrong.
Mm-hmm.
People didn't understand that there was a problem with the buildup of too much debt 10, 15 years ago. There are more people who understand that now. However, the prices of gold and silver and the prices, particularly in the shares, have been attacked far worse than they were in that 1997 to 2001 zone. But from a timing standpoint, that was the time to start building the position because it was buying silver and gold was almost free.
Mm-hmm. And what would you say if somebody asked you how bad will it get? You moved out of the country briefly. You're back now in Texas. How bad is it going to get once this collapse occurs?
We left the country and lived in Costa Rica for 5 years. And our Spanish got to be good enough to understand that once the banks come down, we're, we, meaning gringos, in our opinion, are going to be targets. And when the banking system comes down in the US, it's going to come down all over the world. So we viewed it as there's really no place to hide. So we decided to come back to Texas and live with like-minded people.
Mm-hmm. All right. Well,
Now,
oh, go ahead.
how bad will it get? Uh, my hope is that it doesn't get this bad. My suspicion is it will get worse, where you have no access to ATMs, credit is completely shut off. We may have power, water, electricity supply problems. What I'm going to tell you is if you know how to or can learn how to live like Davy Crockett or Daniel Boone, we may go through a period of time where that's the case. I hope I'm wrong. I I fear that I'm right.
I fear you may be right as well, and that's why we like to have these sobering interviews with people we trust, people like Bill Holter. And Bill, I know that you do care about people, and you want people to be able to protect themselves somehow, somewhat, in this coming financial calamity. With silver in the 16s, below the cost of production, and gold, around 1200. What would the advised allocation be for silver and gold for those who want to jump in right now? Would you say 50-50, 90% silver, 10% gold? What would you recommend?
It all depends on how much capital you're talking about because at these prices, silver is bulk $100,000 worth of silver. I mean, you're talking about what, 10 monster boxes or something, or not 10, but 5 or 6 monster boxes. You're talking about a lot of weight. And if you're talking about you've got $10,000 to invest, I would say bulk up on silver because silver is going to spend. Silver is going to barter, particularly junk silver. It's already broken down rather than 1 ounce coins. If you're talking about millions of dollars, now you've got to lean far more heavily on gold because of the portability factor. And I do think that silver will far outperform gold. You're looking at a ratio now of what, 70 to 1 or thereabouts. It comes out of the ground at about 10 to 1. And the historical average ratio has been 15 to 1. So going forward, I would expect silver to far outperform gold. The only problem is the portability factor.
Yeah. Yeah, and we've seen real action, real honest action in the physical markets at the SGE. So we start to get a sense that even though the mainstream propaganda media has brainwashed Americans into thinking that silver really has no monetary value whatsoever, we see that not being the case in Asia. Correct?
If you look at China for several hundreds of years, silver was used as money. I believe the term tael means silver. Correct me if I'm wrong. Uh, so the Asians understand silver. The other thing about silver is there's more and more uses for it every day.
Mm-hmm.
So you've got more and more demand, and it's probably going to be the next element that goes through extinction. You probably don't have more than 20 years worth of silver that's mineable profitably or even mineable.
Right.
So within 20 years or thereabouts, we're probably going to run out of silver, and that'll be at a point in time where the uses for silver will have doubled, tripled, quadrupled from what they are now. They're growing exponentially.
Well, Bill, thanks so much for your time, and I really do want to advise people to click over to milesfranklin.com and give you guys a call if they want to protect themselves. Can you tell people how to do that?
Yeah, just go to www.milesfranklin.com, or you can call us at 800-822-8080 and ask for any one of the brokers.
Well, again, thanks so much for your time, Bill. It was a pleasure.
My pleasure, Sean. Thank you.
And guys, thanks so much for tuning in, and thanks for your support over at sgtreport.com, thephaser.com, and thelibertymill.com. Real news 24/7. Have a great week. Thanks for watching.